Welcome back for another top-notch video. This week, guys, we'll be talking about the week of 18 January through 22 January. As always, our channel is about the TSP, or the Thrift Savings Plan, Roth IRA, retirement accounts, brokerage accounts. We go over the CSI and F fund for the TSP users / Thrift Savings Plan. And for those in Roth IRA and brokerage accounts, we go over the ETFs, IVV, VXF, EFA, and AGG. What these tend to equal, guys, is the S&P 500, small caps, international markets, and bonds. That being said, the channel kind of does a broad overview of what we have for funds, where funds went this last week. Then we do a little technical analysis, and then we show you guys where our funds are at. If that interests you, please like, subscribe, and share. We really appreciate it. That being said, let's get right into the video. So as always, the first thing we like to look at on the Top Notch channel is the basically the TSP Talk, which is a website, really good website there. They give out kind of the funds for the week. As you can see for the week, the F fund was up just barely. C fund was up almost 2%. S fund was up almost 2%, and the I fund was up almost 0.5%. Pretty good for the week. And then for the year, that S fund has really taken off. We're over 7% now in the first month, while the other funds are just around 2.25%. For charts, let's see how it looks on the charts. So that we have the SC and F fund here, and an I fund, and again this is VXF, IVV, AGG, and EFA. So as you can see, the funds really took off for the week and then just popped right below 2% to end this week. So everything was in the positive. It was a pretty decent week for charts. Now let's do our broad overview on what we have. This is the S&P 500, or the C fund, IVV ETF. As you can see with the C fund here, we are above all our moving averages, which is good. We have this trend line that's drawn in here from the TSP Talk folks here. We have a small gap here, which is something a little bit concerning moving into next week, but that's really all we see. And then way down here, we have the 200-day moving average. So we'll have to wait and see where things go from there. And like I said, we'll do a little technical analysis later on. As far as small caps, or VXF, that market is really about mid-December. It kind of moved out of its trend line, kind of fell out of that, hit that 20-day moving average, and has been above it ever since. So it's doing pretty well for small caps. I'll show you the technical analysis just later on. And then we have EFA here, or international markets. Here's where we see something concerning. As you can see, we have a bunch of open gaps here. That's what those red boxes mean. When we have those, price tends to come back and try to fill those. We'll have to wait and see if it comes back. That could bounce after this 50-day moving average. We'll have to wait and see for maybe a pullback in Q1 here. As you can see, it's hit kind of a top here and hasn't moved above that. So that's kind of also a warning sign with our international markets, or the I fund for Thrift Savings Plan. And then finally, we have bonds. As you can see, towards the end of 21, we really had a fall here. Fell through our moving averages, big open space here. Now we are below our moving averages, but we're hoping to come back and hit that space, but it has not done so as of yet. So now let's move on into our individual charts. We'll start with IVV. It's kind of our technical analysis. Like I mentioned earlier in our broad overview, we are above all those moving averages here, looking pretty good. But just keep in mind that this bottom trend line is drawn in here, and the last time we hit that was in November. Been above it for quite some time. Waiting to see what will happen there. But if this 200-day moving average could get above the trend line, that would be good. Let's look at it on a technical analysis. The things we like to look at is a short-term and long-term chart for IVV. Here's the symbol. I'm just going to explain it real quick. We have price. So the green bars are price going up. Red bars are price going down on this top chart. The bottom chart are our three indicators we like to look at. So basically two indicators we like to look at. We have the derivative oscillator, okay? That is going to be your green bars and your red bars. So when green bars are going down into the red bars, we have a decrease in price. When they're going up, when red bars are going up into green bars, we have an increase in price. Okay, that's our first indicator. The other indicator we like to look at is the PPO line, which is the price percentage oscillator line. That is this blue line above the red line. Okay, the red line is your moving average. Typically when blue is above red, we see positive price movement. When blue is below red, we see negative price movement in our charts, okay? So the two indicators we like to look at. When we have two positive signs, that's a green light, get into that fund. When we have one of the two signs, that's a yellow light, proceed with caution. We have two red signs, that's a red light, and that is to get out of that fund. That's kind of how we do things on this channel. Look at long-term channels, which is a weekly chart, and we also look at a 4-hour chart. So this is our weekly chart for IVV, and this is the S&P 500 or the C fund. Obviously, some very interesting things the last 2 weeks. We have a red sign here with our derivative oscillator moving down for the second week in a row, 2.6% down to 2.3%. Still positive on the price percentage oscillator, so we're at a yellow light in here. Kind of proceed with caution. Price is continuing to go up, so that's very interesting on this long-term chart. On short-term charts for IVV or the C fund, we are seeing some warning signs here. As you can see, price percentage oscillator is starting to move towards that moving average there, and our derivative oscillator is moving down, so that is also a yellow sign. Proceed with caution in the short and long term for the C fund or IVV. Moving on to the next fund, which is VXF. This chart here has a little bit different trend lines. We're using FinViz to show these lines in here. As you can see, FinViz is still within its trend lines on this one. The trend line is drawn right around that 20-day moving average, that one in pink. So it's way up there. Like we said earlier with the other fund, we'd like to see the 200-day moving average get to this line here to kind of be a much kind of safer bet so we don't fall through some of this support. On a technical analysis, we use the exact same indicators as the C fund. So we're going to look at that now. On long-term charts, that weekly chart, what do we see? Look at this, guys. We've been decreasing now for 1, 2, 3, 4 weeks. Price has not reacted. That is very kind of rare to see price not react to the derivative oscillator. That is 4 weeks in a row now that it's gone down. We are now at 4.4%. PPO line is still above that, so it's a proceed with caution on the long-term basis for VXF or the S fund. One sign good, one sign bad. Price is still continuing to rise. On a short-term basis, what are we seeing? As you can see, we have 2 negative signs here. We have the derivative oscillator, which is in the negative or the red. It is starting on its way back up, so that's positive there, but not out of the red just yet. I'm going to give this one a red light with our PPO line below our moving average. Not good to be in the short term as of right now. And also we have these Bollinger Bands are starting to move closer together. It's kind of questioning what might happen in the future. We're going to just watch and see for VXF. Moving on to EFA or international markets. Like I said before, there's some open gaps in here which we are concerned about on our broad overview spectrum. As you can see, it's kind of hanging around this trend line right here, waiting to see if we can stay above it. We have for the most of 2021, or if it's going to break below that. That's kind of our big indicator. And then we don't know where price will go from there. We do have a good backstop right around price at $65. We'll have to wait and see on that. On the charts, short and long term, same exact indicators we like to use. What are we seeing here? Seeing a yellow caution light here as well. Proceed with caution. Derivative oscillator has been moving down for a number of weeks. PPO line is still, that blue line is still above the red line. Price is still continuing to move up. Proceed with caution on the long-term charts. Short-term charts for EFA or the I fund, international markets. What are we seeing? Here we see also kind of an, I would say, yellow sign here. Proceed with caution on the short term because this derivative oscillator looks like it's coming out here. We went from negative 0.4 to negative 0.3, which is good, but that PPO line is below the red line there, so that is a proceed with caution as we're starting to come out with our derivative oscillator, but still under with our PPO line. Those are all of those charts, guys, and then last of all, we like to look at bonds. What is bonds doing? Really interesting. AGG has kind of been in a decline since August of last year, and this year's no exception. Really kind of took a divot right there in 2021. Thought it would break out of this trend line here. It did not. It is below all these moving averages and trend lines here. That is not positive. Could see it come, touch that, and move in a continuing downward spiral for AGG. Please keep that in mind for the long term. As far as charts go, let's take a look at AGG or the F fund. And as you can see here, guys, some real negative signs here. This is a red light. Do not want to be involved in this fund. As you can see, the derivative oscillator moving down here, 3 bars in a row. PPO line has been in the red ever since August on long-term charts. This is a long decline thing for price. It is not a good place to keep money at the time. We thought it might break out here, and it did not. It continued downward, so we're staying out of that fund or AGG for the long term. The short term, where we sit, we're also looking at some negative things here. Proceed with caution or yellow light here for HEG. As you can see, we are now in the negative for the derivative oscillator. Our PPO line is still above, so that makes it a yellow light. Price is kind of just flat, really hasn't moved anywhere, and as investors are kind of waiting to see what people do, I would just stay out of this fund in the short and long term for the time being, guys. So that is all of our funds for this week on the Top Notch channel. The last thing we like to take a look at and go over is where are we allocated. So for the Top Notch channel, since the election, we kind of pulled back our allocation for a little bit. We are currently sitting in the G fund for TSP users, or cash for those that have brokerage and IRA accounts. Just waiting to see those proceed with cautions move for a green light instead of a yellow light, or get out of the yellow light area and move towards the green light before we move into our other funds. We do tend to be a little bit more safety conscious with our funds, so please keep that in mind. Again, we have our Roth IRA brokerage ETFs over here, and then those for the TSP, the funds over here. We have all of our money currently in cash, are just waiting to get involved in markets. We really want to get in before the end of January, so we have this last week here, so be looking for a move possibly in this next week, but we don't know just yet. And then, of course, new allocations will be going into that fund as well. Again, please like, subscribe, or share. Here's where you can follow us and see where our moves are. We really appreciate you guys. That's another Top Notch video. We'll see you guys next time.